Everybody knows about Coal India and crude oil stocks. But there are many potential multi-bagger stocks which are still undervalued in the PSU sector. Today, we are going to discuss the top 8 PSU stocks to invest for the long term. Our government is heavily bullish on the PSU sector.
शेयर मार्केट में रुचि रखने वाले को भी ये गुरु मंत्र है कि जो सरकारी कंपनियों के लोग गाली देना, आप उसमें दांव लगा दीजिए तो आप अच्छा ही हो जाएगा.
Let's decode what is happening. Is this an opportunity for investment? If you are new to my channel, please do subscribe. Also check out my playlist, Best Stocks to Buy for the Long Term. I will give you 5 reasons on why you should invest in PSU stocks. Many PSU stocks were heavily undervalued and they gave good return past year. PSUs are often considered more stable and secure compared to private companies. They are backed by the government, providing a sense of reliability and security to investors. PSUs operate in core sectors are crucial for the overall development and growth of the economy. PSU stocks may trade at relatively lower valuations compared to their private sector counterparts. This can present value investing opportunities for those looking for undervalued stocks. PSUs are integral to the country's infrastructure and economic development. As the economy grows, these stocks also grow, leading to high long-term returns. So let's get started. The first stock is a key player in the power sector. This company has maintained its leadership position in power trading since its inception. This stock was established in 1999 as a public-private initiative by the Government of India. I am talking about PTC India Limited. The company offers integrated energy services, including power trading, renewable energy, advisory services, and investment services. The trading activities involve long-term trading of power generated from large power projects, including renewables, as well as short-term trading arising as a result of supply and demand mismatches. This is primarily through its subsidiaries, PTC India Financial Services Limited and PTC Energy Limited. Interestingly, 41% of PTC's revenue in the power segment comes from its top 3 major customers. The company introduced electricity trading in 2002, co-promoted India's first electricity exchange, IEX, and engaged in cross-border trade with Nepal, Bhutan, Bangladesh. PTC played a pivotal role as the nodal agency for the commissioning of the 720-megawatt hydroelectric project in Bhutan. In terms of revenue split, the company's focus is on power trading, accounting for 94%. The investment segment comprises the remaining 6%. The company would soon achieve a debt-free status following the divestment of its arm, PTC Energy, to ONGC for an enterprise value of Rs 2,021 crore. PTC India's outstandings have reduced drastically due to the late payment surcharge scheme, and it is now emerging as a company that does not take loans to meet its working capital needs. The divestment of PTC Energy is part of the strategy to exit the non-core business. PTC India, with a market capitalization of Rs 5,538 crore, operates with a current stock price of Rs 185. Price-to-earning ratio is 10.66. Lower than its sector pay ratio of 67.08. Stock price rose 130% and outperformed its sector by 88.53% in the past year. Return on equity for the last financial year was 10.19%. The dividend yield is 4.17%. The company is generating increasing cash from operations. The company's profit growth is better than the industry median. Good time to consider buying since the stock is underpriced and not in the overbought zone. 100% buy rating from analysts. The second stock is a public sector enterprise that has been a key player in the transport consultancy and engineering sector in India. This stock is the only export arm of Indian Railways for providing rolling stock overseas. From railways to highways, airports to ports, and even urban transport, this stock has diversified its services and expanded its geographical reach. I am talking about RITES Limited. So this stock has been instrumental in shaping the transportation landscape not only in India but also globally. One of the key strengths of RITES lies in its diversified services. The company engages in consultancy, engineering, and project management across various sectors, including railways, highways, airports, ports, ropeways, urban transport, and inland waterways. Additionally, the company offers third-party inspection, quality assurance, construction supervision, project management, leasing, export of rolling stock, and modernization of railway workshop projects. Let's take a closer look at the revenue split. The consultancy services accounted for 41%, leasing for 5%, other projects for 6%, export sale for a significant 36.28%, and power generation for 0.8%. RITES has truly gone global, undertaking projects in over 55 countries across Asia, Africa, Latin America, South America, and the Middle East. While 90% of its business is in India domestically, RITES has made significant strides in expanding its international presence, with 7% of its business coming from Africa and 3% from Asia. RITES has an impressive clientele that includes prestigious institutions and organizations such as IIM Rohtak, JNU, Delhi University, AIIMS, BPCL, SAIL, NTPC, and many more. The company's diverse portfolio and extensive experience have earned the trust of various industries and sectors. In 2022, the company secured around 50 projects, including its highest ever order for railway track works from the Ministry of Railways. RITES has strategically diversified its operations through strategic subsidiaries and joint ventures. From REMC Ltd handling power procurement for Indian Railways to its wagon manufacturing joint venture Essable. Last month RITES has secured partnerships with Oil India for the design of a new smart city program in Assam. RITES, with a market capitalization of 12,391 crores, operates with a current stock price of 518 rupees. Price to earning ratio is 25.74, lower than its sector pay ratio of 34.36. Stock price rose 48.27% and underperformed its sector by 4.39% in the past year. The company is debt-free. Return on equity, ROE, for the last financial year was 18%. The dividend yield is 3.98%. It is a good time to consider buying as the stock is not in the overbought zone. 60% by rating from analysts. The third stock is the largest producer of iron ore in India. This stock has been a major player in the exploration and production of iron ore, diamond, sponge iron, and vine power. I am talking about NMDC Limited. This stock has been consistently profitable and has positioned itself as a leader among Navratna companies. One notable development is the favorable court order from the Supreme Court, allowing private sale of iron ore in Karnataka, benefiting NMDC. This is crucial as NMDC operates two mines in the state with a peak rated capacity of 14 million metric tons per annum. NMDC proudly holds the title of the largest iron ore manufacturer in India, contributing to 18% of the domestic production. NMDC operates 7 iron mines across India. Beyond iron ore, NMDC operates India's only mechanized diamond mine in Panna and has ventured into coal mining in Jharkhand. The company has a global presence, with interests in Legacy Iron Ore Ltd in Australia and coal ventures in Mozambique. NMDC is a leading agency in natural resource exploration, allocating funds for research and development. With a vision to become one of the world's low-cost iron ore producers, NMDC has ventured into steelmaking. Vision 2025 aims to enhance iron ore production capacity to 67 million metric tons per annum. At present, 5 to 10% custom duty is imposed on critical minerals. There is news that the government might remove custom duty from critical minerals. This will be a big boost for the stock. NMDC, with a market capitalization of 56,772 crores, operates with a current stock price of 195 rupees. Price to earning ratio is 9.68, lower than its sector pay ratio of 10.69. Stock price rose 58.21% and underperformed its sector by 1.34% in the past year. Debt to equity ratio of 0.02 is less than 1 and healthy. Return on equity, ROE, for the last financial year was 20%. The dividend yield is 3.41%. It is a good time to consider buying as the stock is underpriced and is not in the overbought zone. 82% by rating from analysts. The fourth stock is the largest state-owned natural gas company. This stock has been an integral part of India's energy landscape since 1984. They are an integrated energy company in the hydrocarbon sector. This stock operates over 65% of India's total CNG stations. I am talking about GAIL India Limited. This stock is responsible for 67% of PNG connections in India. They supply gas for about 73% of India's fertilizer production. They also supply gas for about 63% of India's gas-based power. GAIL is among the top 10 global LNG portfolio marketers. With the government of India aiming to boost the share of natural gas in the country's energy mix, This stock stands to benefit from the favorable demand growth for natural gas. Beyond transmission, GAIL has ventured into downstream sectors like petrochemicals and LPG, diversifying its revenue streams and leveraging its efficient natural gas sourcing capabilities. By investing in startups in various sectors, GAIL is actively contributing to the evolution of the industry. This company was initially given the responsibility of construction, operation maintenance of the Hazira-Vijaypur-Jagdishpur pipeline project. It was one of the largest cross-country natural gas pipeline projects in the world. GAIL, with a market capitalization of 94,977 crores, operates with a current stock price of 145 rupees. Price-to-earning ratio is 18, lower than its sector pay ratio of 22. Stock price rose 49% and outperformed its sector by 7.27% in the past year. Debt-to-equity ratio of 0.25 is less than 1 and healthy. Return on equity, ROE, for the last financial year was 8.64%. The dividend yield is 3.46%. It is a good time to consider buying as the stock is underpriced and is not in the overbought zone. 76% buy rating from analysts. The fifth stock is the largest telecom infrastructure provider in India. This stock has been a key player in transforming India's communication landscape since its inception in the year 2000. They provide broadband and VPN services along with telecom IT infrastructure consultancy services. I am talking about RailTel Corporation of India Limited. This company was incorporated with a mission to create a nationwide broadband and VPN services network, modernizing train control operations and safety systems of the Indian Railways. RailTel offers a diverse range of services across various industries. From enterprise-class video conferencing to retail broadband through RailWire, they are connecting the nation in more ways. So what sets RailTel apart? It's the only consistently profitable, consistently dividend-paying, and debt-free telecom company under the Government of India. The company's revenue mix was diverse. Approximately 60% came from telecom services, including ANLD and ISP services, while projects contributed the remaining 40%. This includes railway project works and other projects. The company has undertaken key projects like the National Optical Fiber Network, telecom and IT services-related projects, and enterprise-specific IT/ITES projects. With significant orders from Indian Railways, Coal India Limited, Ordnance Factory Board, and Indian Air Force, RailTel is a key player in system integration and bandwidth requirements. From the More Excellence Award to the Best Carrier of the Carrier Award, RailTel has consistently been recognized for its innovative and impactful contributions. RailTel, with a market capitalization of 10,102 crore, operates with a current stock price of 306 rupees. Price-to-earning ratio is 47, lower than its sector pay ratio of 49. Stock price rose 129.02% and outperformed its sector by 105.21% in the past year. The company is debt-free. Return on equity, ROE, for the last financial year was 10.89%. It is a good time to consider buying the stock as it is not in the overbought zone. The sixth stock is an Indian company which provides value-added services. This stock has become a powerhouse in the construction sector, known for its expertise in project management consultancy, engineering procurement construction, and real estate. I am talking about NBCC India Limited. NBCC thrives in three primary business segments: project management consultancy, PMC, engineering procurement construction, EPC, and real estate development. The company's diverse portfolio includes civil construction projects, infrastructure works, and both residential and commercial developments. NBCC isn't just shaping India's landscape, it's leaving its mark globally. With ongoing projects in Dubai, Maldives, Mauritius, and Seychelles, the company is expanding its reach. NBCC is behind some iconic projects, including the Indo-Bangladesh border fencing, Indo-Pak border fencing in Gujarat, and the renovation of Jallianwala Bagh in Amritsar. These projects showcase the company's commitment to excellence. The company has been showered with awards, from the Indian Buildings Congress Awards to the Golden Peacock Business Excellence Award. Let's look at the company's journey through NBCC's milestones, from its incorporation in 1960 to becoming debt-free in 2008, achieving Navratna status in 2014, and more recent milestones like signing a Memorandum of Understanding with Delhi Transport Corporation in 2020. 1 week ago, NBCC bagged a 1,500 crore worth order from National Cooperative Development Corporation, NCDC, to build warehouse and other agriculture infrastructure at various locations in India. This will be a big boost for the stock. NBCC, with a market capitalization of 14,828 crores, operates with a current stock price of 78. Price to earning ratio is 44.53, higher than its sector PE ratio of 38.45. Stock price rose 97.22% and outperformed its sector by 45.26% in the past year. The company is debt-free. Return on equity, ROE, for the last financial year was 20%. It is a good time to consider buying the stock as it is not in the overbought zone. 33% buy rating from analysts. The 7th stock is an integrated engineering and construction company. The company specializes in major infrastructure projects, spanning railways, highways, bridges, flyovers, tunnels, and more. The center has granted Navratna status to this state-owned firm. I am talking about Ercon International Limited. In the railway construction sector, they excel in new railway lines, rehabilitation conversion of existing lines, station buildings, bridges, tunnels, signaling, telecommunication, and railway electrification. Ercon stands out as the only Indian PSU and one of 5 Indian companies listed among the top 250 international contractors. It's recognized as a sectoral leader in transportation infrastructure, particularly in the execution of railway projects. Ercon's diverse services include project management consultancy, engineering, procurement construction, public-private partnership, and real estate. Ercon's revenue mix is primarily derived from the railway sector, 94%, followed by highways, 5%, and other sectors, 1%. With its headquarters in Saket, New Delhi, the company operates through 54 project offices and has a global footprint with offices in Sri Lanka, Bangladesh, Malaysia, South Africa, and Algeria. Ercon has successfully delivered 128 projects in 25 countries and over 401 projects in India. Some of its notable customers include BAIL, NTPC, and international entities like the Ministry of Transport, Government of Sri Lanka, and Bangladesh Railways. Ercon's growth is further fueled by its 11 subsidiary companies and 7 joint venture companies. The company has also entered into strategic alliances, including a joint venture with Cochin Port Authority for a proposed harbour project in a neighbouring country. Looking ahead, Ercon aims to expand its international portfolio, exploring new areas for business diversification, including renewable power. The company envisions transitioning from a construction-centric entity to a diversified company with a broad portfolio of contracts and projects. The International Chamber of Commerce, ICC, pronounced an award in favor of Ercon with respect to a matter of arbitration with Eskom Holdings SOC. The stock has hit an all-time high. Ercon, with a market capitalization of 16,682 crores, operates with a current stock price of 165 rupees. Price to earning ratio is 18.79, lower than its sector pay ratio of 34.36. Stock price rose 166.93% and outperformed its sector by 117.51% in the past year. Debt to equity ratio of 0.29 is less than 1 and healthy. Return on equity, ROE, for the last financial year was 15%. It is a good time to consider buying the stock as it is not in the overbought zone. 100% buy rating from analysts. The 8th stock is an Indian power generating company. This stock was established to accelerate power development in India. Over the years, it has become the dominant power major, engaging in the entire value chain of power generation. I am talking about NTPC Limited. From fossil fuels, NTPC has diversified into hydro, nuclear, and renewable energy, contributing significantly to reducing carbon footprint. NTPC is India's largest integrated power utility, contributing 1/4 of the power requirement of the country. NTPC became a Maharatna company in May 2010. NTPC is not just about power generation, it has diversified its business into consultancy, power trading, training of power professionals, rural electrification, ash utilization, and coal mining. This diversification has strengthened its core business and positioned NTPC as a key player in various sectors. From corporate governance excellence awards to sustainability awards, NTPC has consistently been recognized for its outstanding contributions. The company has also been ranked as the second independent power producer globally. The company made strategic acquisitions, acquiring stakes in THDC India Ltd and Northeastern Electric Power Corporation Limited. NTPC Group has achieved the fastest ever 300 billion units, BU, generation on December 18, 2023. This accomplishment reinforces NTPC's commitment to delivering reliable and affordable power to the nation. Arcon, with a market capitalization of 300,403 crores, operates with a current stock price of 300 rupees. Price to earning ratio is 15.71, lower than its sector pay ratio of 19.86. Stock price rose 75% and outperformed its sector by 37.36% in the past year. Debt to equity ratio of the company is higher than 1. Return on equity, ROE, for the last financial year was 12.45%. It is a good time to consider buying as the stock is underpriced and is not in the overbought zone. 95% buy rating from analysts. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative and subscribe to our channel for more informative videos.